there.
We can,
Can you hear me?
yes.
Let me let me try the tried and true. Let me unplug it and plug it back in.
Right.
How about now?
I can hear you.
I swear.
Can
Technology
you
only
hear
works.
me?
Yep, it only works when you
Awesome.
don't need it
Look
to.
at us. We're ready to rock. All right. Happy Thursday to everyone. Thank you guys for showing your interest and jumping on. I reached out to Josh last week and said, "Hey, we need to have a conversation about what the heck is going on in inputs, what's going on in fertilizer, just an overall, what should folks be paying attention to and be aware of as we get ready to head into the fall, right? Application season, the buying season that may or may not commence. Maybe it already has. I don't know. I'm not in that side, but and then what we're looking at as we work our way into next spring. And so we've had great interest in it, and obviously everyone's just kind of trying to figure out how to put two and two together and have it equal four, because right now it just doesn't look like it's going to. But I figured Josh and I have worked together on several things for quite some time. I've really enjoyed, like watching you produce fertilizer. Just the input content that you put out is really good. So why don't you go ahead, Josh, and introduce yourself, fill everyone in on what it is that you do, kind of some of your background, and then we'll just get rocking and rolling right into it if that works.
Yeah, for me. Yeah, so I live in Kansas City, and this is kind of the area I grew up in. I grew up on a family farm just south of St. Joseph. Uh, Went to high school, one of those type of schools where you go from kindergarten to senior year all in the same building complex. That small. Graduated 49 of my very close friends and had always had the intention I'm going to go to college and I'm going to go to New York City. I'm going to do investment banking, the hedge funds and stuff like this. And ag has this weird way of making sure you never get away from it. And I graduated college, ended up right back in the fertilizer industry from day one. I've been here ever since. I've worked a few different jobs throughout that time. The first 10 years, I actually worked for a company called DeBruce. A lot of you guys might actually know them back in the day before they got purchased by Gavilon. I was on the fertilizer division then. Uh, then went to go work for Coke. Great company, great people, loved everything about it, but it just wasn't a fit. And I started to get old enough to realize there's no use spending your life trying to fit a round peg in a square hole. So went to go work for another company, Tremo, who was the biggest international trader at the time. Learned a tremendous amount. Unfortunately, the head of another division, the gas division, lost $250 million because he was cooking the books, and the company looked different after that. But spent a little time after that one actually in Melbourne, Australia. Again, another one of the situations where the only time I got to talk to my family because they hadn't moved over yet was if I called them on my walk to work or if I called them after midnight. I was like, this sucks. The boys are still somewhat
Mhm.
young. That's not fair to have them this far away from grandparents. Work is not all that there is in life. Came back here, had a few different options. Decided when I looked at the fertilizer market, it always bothered me. And this is from a farmer level, this is from a retail level. Your biggest cost per acre is fertilizer. And what do you know the least amount about? Fertilizer. Because nobody
Mhm.
wants to give up that information because information is power, information is money. And that always bugged me. And this role provided me a chance to kind of break that trend. And trust me, I have pissed some people off in the industry doing what I'm doing. I've got a few companies that refuse to talk to me. And I'm okay with that for the greater good because I still feel like what we're doing is the right thing. Now, the information I put out there may not make a bit of difference. It may not help you improve you, but hopefully, at the very, very least, having that information in hand will at least allow you to have a little bit of a sense of why things are happening. We're going to go through why does nitrogen look strong? It doesn't have anything to do with the US. It's a China, it's a Europe, it's a Russia, it's a Middle East thing. Phosphate. Yeah, it stinks we have these countervailing duties, but guess what? The world is high priced, and the biggest buyer and the biggest seller are scaling back and catching up. So these world events matter so much more than people think that they do. We're part of this world economy, one way or another. So we might as well know what's going on and help that shape our decision making.
Agree completely. That's why I like it. That's why we get along. I
Yeah.
think we kind of have similar mindset, me on the marketing side, where it's like, listen, there's certain things that people in the industry know that are almost intrinsic in nature after a while, that we simply just don't communicate to the farmer that could provide a massive amount of benefit to them. Just simple, super simple foundational understanding of S&D and physical pipelines and, just seasonality and blah, blah, blah. But,
Yeah.
so that's why I've kind of really enjoyed what you've been putting out and putting together. I think it's been very helpful to folks. And so
Mhm.
excited to have you here and excited to kind of just pile right in. So
Yeah.
I guess I'm just going to give you the floor. Let's talk about what is going on the fertilizer side. You had mentioned nitrogen, and kind of what is driving that. And so fill us in, I guess. Let's talk about, what is the big picture? What are you seeing? What are the things that you really think folks should be paying attention to right now, overall?
Well, the biggest thing that's going on right now actually isn't fertilizer. Right now, it's the fact that you've allowed corn prices to fall like they have. I mean, if Angie, you
I've
shouldn't
been
have let it
trying.
happen.
I'm
Come on.
single-handedly over here trying to just will them higher at this point. I really have been working really hard. I'm tired,
Yeah,
honestly.
but I know, I get it. I get it. But that is the biggest story in fertilizer because obviously we have seen in the last few years, we have seen tremendously higher fertilizer prices. But those prices are easier to pay when you're looking at corn that starts with a five, a six, a seven. Those are sexy numbers. Those are big incomes. And even when that fertilizer grain value, and that's you're going to hear me talk a lot about like the ratio perspective of it. So many people just look at the grain, just look at the fertilizer, just look at the chemical, the diesel fuel, whatever. Well, from my perspective, and that doesn't make it right or wrong, everybody needs to do what they feel best. But I feel like we need to look at it from a manufacturing standpoint, inputs and outputs. You go to a manufacturer, they do not care what the input cost is. They don't care about what the output cost is. They care about that relationship. So when I look at fertilizer, I'm looking at it from the perspective of we want to keep as many bushels of corn, beans, wheat, whatever we have, because that means, hey, we've got that many more we can sit on. That means that many more bushels we can market for a full profit. That's that many more bushels of corn we can actually dump in the middle of a pasture for deer to eat or not eat. Just you do what you do. They're your bushels. You do whatever you want. So rather than try to call the low the fertilizer and the high of the grains and all these other things, you and I are not smarter than the marketplace. And I don't mean that as derogatory. We're just not. And if we were, we're sure as hell not spending our time doing this kind of stuff, right?
Right.
You're seeing a Caribbean background right now if I know that kind of information. I ain't in the Caribbean.
I
So
wish.
so I always look at it from a standpoint of how many bushels are we spending per ton of fertilizer. And so we have seen worse values in the recent years than where we're at today. But again, because you're looking at five, six, $7 corn, it's easier to pull the trigger. Here we are. We are on the doorstep of harvest. And we have got a lot of new crop corn pricing that's starting with a three out there. If you are fortunate, and I haven't heard anybody talk about it yet, but if you're fortunate, it might be a $4, tremendously lower than what we've seen in the last few years.
Mhm.
So you've gone from periods of very good years to all of a sudden the rug has been ripped out from underneath you. And you are sitting there trying to figure out what in God's name am I going to do? I am not making money this year in 2024. And guess what? You look at 2025. What does that look like? Dog crap. So it doesn't exactly put you in a spending mood. I'm guessing, Angie, you guys probably aren't doing a tremendous amount of marketing on the grain side because nobody knows what to do. It's a bad time to step in. That is affecting the fertilizer market because the last few years, the fertilizer market's been very, very easy because you have got a captive demand audience. And even if the price didn't make sense, people were still buying. It's like, listen, I got money to spend. Yeah, sure, just lock it up. I got to go somewhere with it. That's no longer the case. We've got this stalemate. We've got a lot of global supply issues that are going on around the world across the different products. But then again, demand wants nothing to do with it. And you can't really rally a commodity marketplace without that demand input. So we're just staring at each other. That cannot last forever. There are things that worry
Mhm.
me, but as of right now, the market is just sitting back and saying, listen, I'm not going to lock in a crap situation. I'll just wait and see what happens.
Mhm. What are the, kind of talking about your lack of direction and some of these global supply issues that we're seeing? what are the global supply issues that are out there that, what would you say are the top ones that are impacting supply availability? And to what level are they driving prices higher?
Let's start with urea. Just
Okay.
because it is the biggest produced product by the most number of producers around the world, it's the biggest trendsetter for nitrogen. We've got three major supply issues around the world. Number one is Brazil. Now they only produce about 1.5 million ton per year, but very very high natural gas prices basically made the manufacturer where they were losing money with every ton they produced. They just said we're not doing that. We're not in the business of losing money, so they shut it down. That is the loss of a 1 million ton supply, and guess what? Surprise! They have to buy that 1.5 million ton for the marketplace to replace it.
Okay.
That's number one. Number two is Europe. So if you remember back in late 21, Europe and Russia were fighting over the Nord Stream 2 pipeline, all this other stuff. And then you had the Ukraine invasion that was happening. The end result was they just stopped shipping natural gas.
Hmm.
And so Dutch TTF is what we watch. That's their natural gas price. It went from, say, historically speaking, three, four, five, $6 in MMBTU, which is that measurement, 103 by August of 21. That's your main input for nitrogen production. So what do you think that does to production? It shut it all down. Now, since then, fortunately, that price has plummeted back down into like the $12, $13 range, and their production has improved back to about 75%. But that leaves a quarter of their production offline. For urea, Western and Central Europe produces historically 11 million ton. That's 2.75 million tons. So now we've got 1.5 million and 2.75.
Okay.
The third and bigger one, and this is where it hurts. China. Historically speaking, they would export between 5 to 5.5 million tons of fertilizer or of urea. Well, last few years, the government has imposing export restrictions because they want to make sure there's adequate supply for their farmers, and that creates a lower cost for their farmers. And unfortunately, for the rest of the world, that approach has been successful. Guess what they're doing today? Restrict, restrict, restrict. January through July. Remember, 5.5 million ton per year total
Hmm.
historically. July, 219,000 ton. We have not seen them in the marketplace in August. There's a big India purchase tender going on right now. It looks like they're going to lock up about 1.2 million ton. No, in no view that China's going to be any part of it. And so September, they're probably going to be nothing. It is extremely feasible to see a scenario where China will fall short 3 to 4 million ton of their historical norms.
So what is driving that in China that they would back off? With their economic situation as it is, you would think that they would want to really be looking at upping the export side of things. And so I understand the self-sufficiency of food production and things like that. I mean, are they really using that much more urea domestically, or are they just trying to disrupt you know certain market structures?
I think that they are trying to make sure, they've got a billion people, billion plus people, and a lot of them are farmers. They're
Hmm.
trying to place the people. From a communist standpoint, in order to keep your government going, you got to keep your people happy. If all of a sudden your people get hungry or they can't produce or anything, they get angry, they take to the streets, you are in jeopardy of losing your role. So they have to keep those people happy. And I think that's number one. I think a subset of that situation disrupting the global marketplace is just a welcome, happy coincidence.
Right.
I don't
That's
think
just a
that's a
lucky benefit, one of those
yeah,
where you're like, it's a perk, not a bug or
yeah,
whatever.
yeah.
It's a feature, not a bug.
So
Um,
yeah.
Go ahead. Sorry.
Oh,
Can-
I will say one thing about China that bothers me is that their operating rates on urea continue to look very, very high, and they've
Mhm.
exported next to nothing. And I keep asking this question: if they're historically shipping 5.5 million ton, but they haven't exported anything this year, where did it go?
Yeah, and
Are
they're
we going to?
still producing it, right? Like, I
Yeah,
mean, they're still producing it. It's just not. Could it be part of the government stockpiles that they're looking because they're talking about increasing government stockpiles? Is urea something that you can hold? Like, I'm going to show my ignorance, but
yeah.
is urea something that you can store for an extended period of time?
For a little while, presuming you keep things like humidity and things like that under wrap, keep it dry.
Which we know they
It'll
won't,
store.
but
Right?
they can
Yeah, it'll be
try,
crap.
right? Like that's
But then again, a lot of their stuff goes to these countries where they're not putting it through air spreaders. They're not putting it through these different machines that we're used to. We're very used to having technology. Now, if you see a picture of fertilizer, what do you typically see? It's somebody holding a bag and they're doing this crap. They're tossing it. So you don't
Like me
care if
with my
there's lumps.
Miracle Grow on my petunias every summer.
Exactly. So
Um,
they don't care about the quality. They can get away with some of that. But yeah, I don't know where it's going. There's a piece of that puzzle glaring that is missing and is driving me nuts, but it's China. Good luck getting any information from
I was
China.
gonna say, is it possible that they could be like doing some under the like? What about Russia? Like, where does Russia play a role in this? Would Russia want to like Russia is a producer in and
Hmm.
of themselves, right? So it's
Yep.
not like you would see. You know, my thought would be is China sending it somewhere that they don't want us to know they're sending it, which would just there's basically that or somewhere in the Middle East, which nowhere in the Middle East. So yeah, I mean, I'm right there with you now. I'm gonna
Yeah.
have a puzzle I have to solve.
Yep. And that's one of the things that really keeps me up right at night right now because if the missing piece of the puzzle is that yes, they are operating a lot, they are filling all their domestic storage, and the result is they are going to be exporting the crap out of stuff in a pace that we've never seen before in Q4. Fundamentally different point of view of the marketplace.
Well, that's
Perhaps the
fun.
yeah,
I
perhaps the
love I
operating
mean,
rate.
it's the same thing on the flip
Yeah,
side in grains, right? Like
yeah,
if they change their mind and decide they're going to start to aggressively purchase post, Q1 of 25, the whole entire market structure shifts from where you
mhm,
think it is today versus where it's been.
right.
So the Chinese story is not new, right? So China has been restricting exports for 3, 4 years, which is what you said, basically like 21, 22, right? Like, and
Yeah,
everything came to a head is when they started doing that. The Europe thing, also not new. The
nope.
invasion's been going on for 3 years now. Brazil may be more of a bit of a surprise than the others potentially, but what is going on in the world production? Is anyone working to offset these losses that we're seeing, like with prices as high as what they are, the margins just not there? Or is it just something that takes, is it just something that's not, no one wants to get into the urea business at this point? Is that kind of what we're seeing?
I'd say it's probably more than that. So when you think about it, if you were to make a brand new world scale facility, and we're talking about a large enough facility that you can compete on the global level. A great example, Weaver, Iowa. Coke just
Hmm.
purchased that asset from OCI. They
Yeah.
spent about 3.8 billion US to purchase that facility. And honestly, I think they got a steal at 3.8 billion.
Hmm.
I think that thing would probably cost more than 5 billion to build today. And so you think about it from an outside fertilizer investor point of view, they want that guaranteed return. They're like, listen, we'll give you the money, but we have to have a guaranteed return over a 10, 15, 20-year period. Well, you're not going to get that in the
No.
fertilizer world. This is ag. We don't work in guarantees.
Right.
So it's very
Or
hard.
margin. We don't like that either.
Yeah, but if we're losing money, we at least make up for it in volume.
True.
But so your outside parties don't really want to get into it because they've got better things to do with their time. And then if you're a manufacturer here, why do you want to produce more product? That just means there's more supply on unchanged demand. Prices should go down. Why do I want that? So when you look around the world, Nigeria, they have a plant that's now up and running very, very well. They're doing a great job with it. India's got some domestic production that wasn't there before that's running very, very well. But outside of that, the list of new nitrogen builds around the world gets very low. North America should be looking at it. Our natural gas is low enough to compete on a global scale. And we have the demand. We import 5.5 million ton of urea a year. We import a few million ton of UAN. We import a couple million ton of anhydrous. We need the production, but nobody builds it.
We're just not seeing it. Like, what are we seeing? I mean, from an expansion standpoint, and then we'll kind of go back to some of uh, the other outlooks, the other fertilizers, if you will.
Yep.
But like, what are we? Because I know the USDA's thrown out grants and things, right?
Mhm.
For or they've talked about it. Is that just smoke and mirrors, or is
Yes.
that something that's just not? It's really kind of like, hey, yeah, we want to expand production, but because we've got, I'm thinking potash specifically in Michigan though, like, but we had a Hershey plant, we've had some plants that have actually been shut down. And we've had a few people propose bringing things back online or working to expand production. And it's 5 years later, and it's the same news story every time. Like they're looking for it, they want to work with looking for investors, looking for this, looking for that, and then you'll see the USDA post about grants to increase or whatever. But it's really just not. It's not things that are congruent with one another. Like it's just kind of like, yeah, we'll give you this, but it has to meet these requirements, and it's really you're not going to meet requirements.
Well, and that's the bad part about it. Do you realize how hard it is to hold in laughter in a large audience listening to the Secretary of Ag at Commodity Classic when he sits there and talks about all these things they're going to do and how they're going to help. They're going to have $250 million to help out the fertilizer market.
Yeah, I would just
That,
let it out, Josh, next time. Just so
I
you know, like
for my
if I
health,
were there, we could
yes.
do it together. We could just say
Oh,
Baja.
yeah. It's such a small amount of money. Again, $3.8 billion to purchase a discounted nitrogen production facility.
Hmm.
250 million is not even a down payment if they gave it all to one party. And this is supposed to be for phosphate, for potash, for sulfate,
Hmm.
for nitrogen. It's like, come on, guys, quit slapping us in the face and telling us you love us.
Right? It's a
You obviously don't give a
disconnect.
crap. Yeah, you're giving billions of dollars to everybody else around the world. We could literally be producing this nitrogen at home, and we could uphold it to these high environmental standards that you have. Just because we don't produce it in North America does not mean it's not going to be produced somewhere else, and they don't have the same standards. So if you're worried about the environment, wouldn't you rather control it here? Aren't you worried about feeding people around the world? Wouldn't you rather have the inputs come from here? But again, that's trying to use logical thinking on a place like DC, and that does not work,
Right. Unfortunately.
unfortunately.
Next category that you're watching. So we kind of talked about urea and our, there are global supply reductions of availability, out of your top three, your Brazil, your Europe, your China. What else are we seeing out there that is having an impact on keeping prices elevated? And, what is your expectation as we kind of watch here over the next few months as to what happens next?
Number one, it's going to be the timing of the demand. So right now, the conversation has been, I'm not interested. I don't want to do anything. And so the demand continues to drag its feet and stall and wait. And it's done a fantastic job. But eventually the demand has to step forward. And I'm not telling anybody on this call that, hey, we have to do it today. I am not saying that whatsoever. But eventually we got to get ready for next year. As we talk internally, we're still using 91.5 million acres of corn. That requires a lot of nitrogen. I think we're going to see a cutback on phosphate, but that requires a lot of phosphate, a lot of potash, a lot of sulfate. There's still going to be a tremendous amount of demand out there, and we eventually have to prepare. And the longer that we wait, the stupid metaphor that I use is it's kind of like a dam. The longer we wait, the more that water rises on the dam. And eventually that dam has to break. We have to get ready for it. And the longer we wait, the higher that goes, the harder it's going to be when it breaks and finally everything comes crashing in. So that is going to be the one thing. It's just that demand finally coming forward and how long does it wait before it snaps? And then number two, when will the supply story start to come into focus? Um, it's starting to a little bit globally. We've actually seen a little bit of strength on the back of this India tender. Looks like the market's excited about the fact that we're cleaning up a lot of this excess link that should get the manufacturers comfortable here for another month or two. And that's when your global demand starts to come back. So I think we are actually already in that mix of the international market going from a I couldn't give a crap less, shut up, leave me alone. I'm going on my 3 week European vacation to, oh crap, spring's right around the corner. We should probably get ready for that, shouldn't we? I think those are the two big things. And again, we're going to have to watch something like China. That's the wild card. It can fundamentally change the marketplace on how they approach it. But right now, based on the information we have to just assume they are not going to be a large part of it. It looks like the government's going to continue to screw us on a phosphate or a nitrogen standpoint.
So basically, we're kind of sitting in a similar situation then as to what we're sitting in grains to a certain extent. You've got an ill-defined market structure to right. I mean, is that
Mhm.
what you're kind of alluding to here? Is that you're not really sure when demand's going to show up. You know it's coming,
Mhm.
but we just don't know when and if it all comes at once or if it's something that's super spread out. And we don't really know, what supply to it. I mean, I guess it's a little bit different in the sense that in fertilizer, your supply is going to be reduced, or at
Mhm.
least it's a little bit more of a known. Um, Pricing wise though, like, and I'm not gonna say this like it's not trade rec like you said before, but like pricing wise though, would you lean towards prices moving higher or would you lean moving,
Nit-
let's just go short term, long term, or short term between now
yeah,
and the end of the calendar year, and then maybe between now and or the end of the calendar year and spring, maybe kind of separate them.
I would say nitrogen and phosphate. I see support on both of those now through the end of the year, and probably now through the end of next spring. Potash, the potash is the one input that when I look at it, It's very well supplied. And as we continue to go forward in the calendar and we look at, a new mine coming online, a huge expansion in Canada, Russia having more production, China continues to invest in Laos and increase their production. Belarus is going to be coming back eventually. They're working on that. There's a lot of potash out there. It's the one where I'm just like, there's nothing that gets me excited for potash. I just think it's kind of a dead stick. But nitrogen phosphate, unfortunately, I see more routes taking us to higher prices than I do lower prices for this fertilizer year.
That's not what I was hoping you would say,
I
honestly, but
I don't like saying it. And this is one of those things, and trust me, and just so everybody knows, it it does not affect me where fertilizer prices go. We don't do anything with physical. We don't touch the stuff. On the paper side, everything we do is back to back for our customer base on the futures and things like that. And I try to not even trade fertilizer stocks on the stock market because I'm
Mhm.
afraid if I own Mosaic or I own CF or something like that, well, guess what I'm going to start telling everybody? Oh, you better buy the crap. It's going sky high because I want my stock price to go higher. So I won't
Mm.
even let myself trade that. So if you're listening to this, like, oh, well, he has a vested interest. I do not. And in fact, if I have a vested interest anywhere, it's that my family still farms south of St. Joseph. And Thanksgiving's coming up, and that conversation sucks. They're like, so when's
Be
fertilizer coming
prepared.
down? Yeah, it's like, it's not. It's going to be high. I'm sorry.
That's why they're gonna be like, all right, well, Josh gets to sit at the kids' table for turkey today.
Yeah.
Carl, do you have a question you want to ask?
Josh, we're starting to see a little bit of tuning in the market and some positioning for the upcoming election.
Mhm.
Mainly a little bit of concern from some of our trade partners over potential trade wars again. Have you seen any of that in the fertilizer and the input side yet? Any, panic buying, panic selling either side, or any of that yet?
Nope. And frankly, I say no because one of the big conversations that we've seen are these import tariffs that we've seen, especially on phosphate. Right now, we've got three of the biggest countries blocked from coming here: China, Russia, Morocco. And folks are like, "Oh no! If Trump gets in, they're going to completely do away with it. He's going to save us." Guess where the Chinese tariff came from? Trump administration. Oh well, Biden or
That's
Harris gets in, it's going to be them. Well, they allowed the other ones, the phosphate ones, on Morocco and Russia to pop up. So neither administration to me screams free and completely open market. I do feel like Trump will probably fight some others to the benefit of everybody, but who's going to pay that price? The farmers.
I agree. That was a thought. One other quick question I have.
Mhm.
Today we got barges grounding on the South Mississippi.
Mhm.
How's that starting? Is that going to start to affect our availability of product this fall, do you think? And more importantly, next spring if we don't get things corrected? I mean, obviously it will, but to what extent do you think it might?
It really depends, right? I mean, obviously, that's a great political answer. I might as well be in Washington, D.C. with it depends. But it depends on how bad is it. It sounds like, yeah, there are some grounding issues, but for the most part, they are working their ways around. They're still able to transit up and down the river system. Now, if those water flows do continue to go lower and lower and lower, and we start getting to that situation, was it 2 years ago? I think it was when we were talking about like Memphis as low as it was in these different spots. That becomes a much, much bigger concern. I guess I'm holding out hope, and I always sit there and say hope is not a strategy, so I shouldn't say that, but I keep holding out hope. We'll have some more moisture systems come through, refill the waterways, and we can put it behind us. But yeah, any sort of a disruption to the river system has effects all the way through the marketplace. And right now, if it was going to happen, today is that perfect time. It's early September. We still got a bit of time. We're not even up to the upper Mississippi River closure yet. We still got a lot of time to prepare for that fall season. But then again, you start looking at the calendar, you're like, well, wait a minute. We go November. It's September. October splits us between now and November. So we're not even that far away. We're 60 days away. So I'm talking myself in circles, but it's all to sit there and say it will depend. If we can keep just a decent amount of water, yeah, there's going to be some hiccups and issues here and there, and maybe they'll have to lighten some barge loads. But we have seen this so many times over the last few years. It feels like the market's gotten really good at dealing with these types of situations, and I'm hoping the impact will be fairly minimal. That was the longest answer to sit there and say I don't know.
Oh, that's you can tell that you're good at that. We do that for a living, right? Like
How can I say a lot of things without answering anything and sound really
how can
smart
I
doing
tell
it?
you it may go up, it might go down, it might stay the same, but do it in a different way this time than what I did the last time. Yeah, it's a great gig if you can land it. Couple questions from the audience. First one, oh, let me go back and find it. Okay. And so this is from our friend Kyle Stockton. I don't know if he wanted me to tell you his name, but it's Joe Schmo asked, price ratio of different end sources, not end sources, end sources. Both current kind of, but also trends. Like, what are you seeing from price ratio standpoint? Have you been looking at it? Urea versus UAN versus NH3 or anything like that? Like, is there anyone that kind of stands out in particular that you think is going to be the better end source to be looking at?
No, it seems like we had things completely blowing out. We had UAN being a massive premium versus urea. We had anhydrous last summer got to stupidly low price levels. The last few years have really seen things get out of whack. But it seems and sounds as though the manufacturers are saying we're not going to allow that anymore because there's too much demand fluctuation when those things happen, and we got to have the demand. So we are going to make sure everything stays in pattern. I think we're going to return back to those kind of historic normal spreads between the three different inputs on nitrogen side. Now, as far as versus, I'm going to actually share my screen here. Where is that? Looking at the, let's look at, and again, the headline says NOLA urea new crop corn ratio. NOLA is New Orleans, Louisiana. That's our most liquid spot in the North American marketplace. So I never know what audience I'm talking to, but NOLA is kind of like our Chicago for corn. So that's what we always talk to. We always need to figure out there's going to be a basis spread, differentials, things like that. But just for conversation, in the new crop corn for urea, anything past June 1st, I am comparing it against December this year, let's say 25. Because if you're buying urea on July 4th, you're buying that to apply the next spring to raise next year's crop. Now, some people might say, well, I don't care. I care about December 24th. That's fine. We have those graphs. This is just how I look at it. I'm not trying to tell anybody how to market. This is just what makes sense to me. But all of that to sit there and say, this looks at the weekly ratio between those two. How many bushels of corn is it taking to pay for that 1 ton of urea? And it goes clear back to 2014. And this red line right here is where it sits today. So you can tell we have had it significantly less. This number sitting at around 70. We've had it clearly below 40 back in 17, 16. It's going to be hard to get down to this bottom range, down below this 55 number. But we're not nearly as bad as what we've been these last few years either. We're just kind of middle of the road. There's nothing terribly exciting. It's not too good, and it's not too bad. So that's looking at the urea side. Same thing, looking at UAN, a little bit higher on the range, but again, kind of in the mix of what we've seen is considered quote unquote historically normal. The one that worries me, and I'm going to look at the Western Corn Belt just because Eastern Corn Belt doesn't have a fall anhydrous application program. But this Western Corn Belt, this is already fairly high. And this is actually going to continue to move higher as the summer fill numbers continue to get filtered out of the ranges. We're on the higher side. But what we're seeing, and for one reference, I talked about how low it was last year. When that number came out, and I looked at what the anhydrous price was, and I looked at what the corn price was, I called my dad. It was like the second call I made. I said, buy your anhydrous. Well, I haven't talked to my retailer yet. We'll do it and buy your anhydrous. Well, what kind of number are you thinking? I said, shut up and buy your anhydrous.
Why you keep asking questions, Dad?
Yeah, this is one of those times. I know you don't like to listen, but for the love of God, for once, do it and then go sell some corn. Because when I looked at it, that black line down here, that's the best number we've got on history. Now, these numbers only go back to like 2010, 2012, but that was one of the most aggressive, best farmer values we've seen. So I didn't care about the flat price of either one. I knew this number was ridiculously good. But now we're paying the price because, like, well, we're not going to screw that up again.
Right.
And they know fall anhydrous suppliers like to stay with the fall program. My dad does, my family does. It's some people think agronomically it's better. Some people think I can't wait till spring and risk not getting it on. It just fall guys are fall guys. So this is kind of where we are. We think this is going to continue to trend higher, but it's just the market, unfortunately. And based on what they have sold or what we believe they've sold, there's very little reason to think that anhydrous price is going lower this fall, maybe not even through next spring.
Now, toot your own horn a little bit. Is this something that folks can get from you? Are they able to kind of see your little diagrams here in your some of them in the videos?
So I do that monthly. I hate pimping this kind of stuff. I'll do
I
it just real
know,
quick.
but you're
Just
gonna
rip the
have
band-aid off.
to.
I hate it when people do this.
I'm
So
gonna
I don't.
make you.
Okay. So I do a monthly farmer newsletter. The idea behind of it is to kind of give a recap of what's happened in the last month, to give a little bit of an idea of what we think is going to happen going forward, just kind of puking out some of the point of views that I've got. And then we also talk about these ratios and we list them out every month and update them just to show you, hey, here's where it's at. And I used to do it for free. It was just kind of a labor love type situation. I didn't like the way the market was, so I just did it. And then management found out I was doing it for free, and the manager's like, "No, you're using company time and resources because that's not going to be the case."
Right.
And they're like, "You have to charge." Like, what? And I said, "Figure it out." Well, fine. I called my dad. I was like, "All right, I need a favor." I said, "You're walking through a farm show, and I'm standing at a booth, and I'm selling fertilizer information. What price do you pay?" Sitting there saying, "You know what? I'll give this a shot to see what it is." He's like, "Oh, like 25, $55." Like, sold. So they I had to put a price on it, but it's like 35 bucks a month. Or if you do
Mhm.
annuals, like 300, which is 25. I don't like it. That's not the purpose of it, but it is what it is. And if you want to
There's
see my,
value in it. I know people are gonna ask me. They're gonna ask
yeah,
after the fact, like, do I get to see this? Do I not? And so I want to put that out there. And when I send out the recording, I will. How do you want it? Do you want me to throw your email address in there for folks to reach out, or do they sign up
yeah,
online?
they register online.
Okay, I'll put the
There's
link
register,
on. We'll get
yeah,
that for
and
everyone.
then and I'll tell you what, if everybody wants to see it, if you will compile a list of emails,
Mhm.
I can just put it all in one distribution list. I can send it out in one bulk. I can send out what I just did for September.
Okay, I'll send
And
it over to you so everyone that
yeah,
registered can grab that.
yeah.
Next question, just discussing the lack of supply,
Mhm,
global supply hiccups that we're seeing, and the lack of incentive when it comes to building new plants.
mhm.
So are we at the point? This is a question from Boyd Brooks. Are we at the point in the industry now where it is like OPEC? They can control the valve of the supply with the expense of the plants. There's no incentive to bring more supply online. How do we feed all the people by 2025 if we're seeing a limited production in fertilizer or a continuation of consolidation?
That's a great question, and it depends on the input. Nitrogen, when you look at urea, it is so widely produced around the world, it's hard to see that as an OPEC. There's just simply too much competition. Now, when you look simply at the US, your biggest three manufacturers control 80% of nitrogen production. So we've got a pretty good oligopoly going on here in the US, but the US is such a small part of the world market that it's really that whole situation. We need more production. When you look at because again, these plants take a long time to build, we've got a pretty good idea what's coming online. And we also, historically speaking, know what demand is doing. The problem is the expected supply is growing at a slower pace than the expected demand. So that differential is squeezing, squeezing, squeezing. And I just went through three big points that total up to about 6 to 8 million ton shortfall. That differential is not 6 to 8 million ton. So that's where I just keep banging my head against the table like, we need to make more. Somebody needs to do it. If I had $5 billion, I would build one, but I don't. So from a nitrogen standpoint, somebody needs to step up. Some country need to do it. And I'm hoping, if nothing else, some of these countries will get tired of kind of what they see as being taken advantage, and they'll get sick of it and say, screw this, we're just going to do it ourselves. That's what we saw with India. That's why they brought that on. They're sick and tired of the world taking advantage of them. So that's my view on nitrogen. Phosphate, unfortunately, you got to find phosphate rock. Nitrogen, if you got natural gas or some other way of producing the nitrogen fertilizer, you can build it wherever you want. You got to have phosphate rock for phosphate production, and that is not easy to find. Norway found a massive amount, and they are going to develop it. They are going to mine it, but unfortunately, a lot of that sounds like it's going to be earmarked for battery production because that's the premium market. People are like, well, why don't we just produce more in Florida? And I can tell you, Florida could give a crap less about phosphate production. Florida cares about three things: tourism dollars to NASA, tourism dollars to the beach, and tourism dollars to Mickey Mouse. The Florida economy runs on tourism. The only hill you see in the state of Florida is these piles of gypsum, and they can't do anything with it right now because it's got a really slight radioactive tinge. That's the byproduct of phosphate production. So you can't put it on fields because obviously it would be able to lose their crap. And you've got more and more development in the state of Florida. And so when they look at it, they're like, we're not going to allow you to expand your mining. What you have is what you have. And nobody has found anything more. So unfortunately for phosphate, we're kind of hemmed in for the moment until somebody finds a new reserve somewhere. Potash is the only one I think sits pretty good. I think that potash supplies are plentiful. The outlook continues to get better. I will say potash is the one that when I look at it, I see that as a market that is extremely well supplied and teeters on the oversupply conversation.
Interesting. Thoughts, I guess, what are you, we'll just kind of leave it with, or I'm going to say leave it with, but what are you looking at, or what are you thinking, or what is the point that you would like to say, you know, to folks that are watching? Like what I guess would be, if you had the ability to kind of just be like, in all of the things that I'm looking at in the market at this point, um these are the things that and I feel like that's probably a really big question, but you know, I know on the grain side the things that I have in my head that I would kind of throw out there, and so on the input side, the fertilizer side, you know, what would be the piece of advice that you would give growers? And it can be about, if you want, if you have several different pieces for each component, that's
Yeah,
fine too, but you know, what would you think, or what do you think would be the best advice to give to a farmer right now, you know, who is looking at having done 2024 and looking at 2024 being "Ugh," and then getting the you know, like no one's excited right now to go out and harvest corn. Uh, you know, and they're even less excited about doing it all over next year, looking at the margin situation currently. So I guess, you know, what would be your piece of advice that you'd want to throw out there?
I would say the first, and I'm going to say this bluntly. Please don't hold this against me. Quit marketing emotionally. And I say that from a high grain price. I say that from a low grain price. I say that from a high fertilizer and a low fertilizer price. And that's why I hate looking at inputs and outputs from a flat price perspective. When I see, let's face it, if I were to ask everybody on this call, do you like $5 corn? I'm guessing most people come back and say, yeah, that'd be great. And if we hit $5, what's going to happen? I'd like 550 better. I'd like six. We all do it. I'm not acting like I'm immune to it. If I saw fertilizer at $200 a ton, well, could you do 150?
Mm-hmm.
We always want that little bit more. And that's our emotions that they're saying, oh, if I can just win a little bit more, I can really get it. And this is especially true today. Everybody I've been talking to, they're angry, they're pissed off, they're depressed, they're confused, they're worried. Emotion, 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 emotion.
Mm-hmm.
And that's okay. There's not, I'm not saying that there's anything wrong. And trust me, Angie, if you talk to Angela, my wife, she would sit there and bore you with all the stupid, angry decisions I've made in my life. And not a damn one of them ever worked out well because
Mm-hmm.
it was an emotional decision. So be all those things. But when it comes time to marketing, you try to lay that off to the side as much as possible and make the best decision you can financially for your operation. And listen, I'm not going to sit there and say this is the price you have to do or that price. Every single operation is going to be different. Every field is going to be different based on inputs and outputs and everything else. But look at it from a very cold and calculated point of view. That's people are always asking, well, how's this guy always building and buying more acres? How's this guy doing this and doing that? A lot of those guys approach it as a very cold and unemotional CEO. Jared Morgan heads up our education department for StoneX, and he loves to tell a story. This dad has a son, and he's been doing it for years, and finally his son's getting ready to take it over. He's like, all right, son, here's the number of bushels we have. We're going to split 50-50. You market it how you want to, I'll market it how I want to. And when they get done, he always asks, well, who do you think won? And it's always like, oh, the dad because of experience and relationships and blah, blah, blah. And the other side's, well, it's the son because of technology and this and that and this. All right, the son won. Okay, let's go through why you think again. They'll go through a litany of reasons why they think, and nobody has ever gotten it right. He said, this is a true story. I know the gentleman, I know the son. The son is autistic. And what do we know about autistic? They don't let the emotion. So he was looking at the market and just saying, here's what the market is. This is what it's telling me. I'm not bought into. I'm not letting fear or
Hmm.
excitement drive it. I'm just looking at the cold hard numbers and making a decision. His son beat the pants off his dad.
It's
So
hard though, because this
it
industry is
is.
built off from like there's so much in the market analysis, the grain marketing side,
Mhm.
and all of that that is so and we've had this conversation before,
Mhm.
because I think you're right on, where the desire to always make that extra nickel, and human nature is
Yeah.
there anyway.
Yeah.
But then to feed into it with all of the analysis, with all of the Saturday morning TV shows, with all
Mhm.
of the, this is what I'm going to guess that the market's going to do, and this is how you should trade, you get caught up into it.
Absolutely.
Taking that advice then, and kind of saying that lack of emotion, let's convert that over to these fall in hydrous decisions or these fertilizer purchasing decisions for a grower, from a buyer's standpoint then, or from from someone who is obviously, it's on the flip side, we're talking about marketing, make sure you're
Mhm.
making smart selling decisions. How do we convert that advice into the buy side? For you, if you were to kind of tell growers now how to remove some of the emotionality from their input purchasing decisions, is there advice that you would give them in particular on how to do that, or what to look at? Like, is it the ratio, the corn to per ton, or are there certain things that you would give advice wise to a grower when it comes to helping remove the emotion that because right now, obviously, you're looking at $3 and something. You're looking at a lack of ability to really book margin. You're looking at new crop and prices being extraordinarily high, comparatively speaking, but it doesn't matter either to a certain extent, or it doesn't mean that prices have to go lower. So I guess what advice would you give on that side when it comes to making that buying decision?
I'm a huge advocate. If you're going to buy the input, whatever that input is, I could care less which one it is. Sell some grain against it because my biggest fear, and we had seen this play out unfortunately over the last say 6, 12 months, as we came off of these near or all time highs back in early 2022. Some people sit there and say, well, if I'm buying, I'm hedging myself, or if I'm selling my grain, I'm hedging myself. No, you're not. I can make a strong case that if you're only buying or you're only selling, you're actually speculating more than you think. Because what happens if let's say you buy fertilizer today, or let's say we bought fertilizer when corn was $5 and you didn't sell any corn, that corn fell to where it's at today. Do you think you are better or worse off because of that? Let's say flip side. Let's say you were to sell corn today, but you're like fertilizer prices have to come down. Grain prices are so low, they have to come down. So I'm gonna sell some corn today, but I'm just gonna wait on fertilizer. And then China stays out of it. Maybe Russia does the unthinkable. Maybe the Middle East blows up. Any sort of these unthinkable events around the world, and all of a sudden we see nitrogen rally $200 a ton. Do you think you're better or worse because you sold that? And the thing that drives, and I'm guessing you probably feel this a little bit in your role, is that it kind of drives you nuts that we don't see more people selling ahead when the opportunity is there. Now, plenty of risk. I haven't raised the crop yet. I haven't done this. I haven't done that. I don't know what I'm looking at. There are risks associated with it, but it's like, why don't we do this? Well, to a certain extent, if you can't buy the input for that future crop, only doing one side of the equation is actually more speculative than anything. So I'm a very big fan of if we're going to buy the input, we need to sell the output and vice versa, just to make sure we've got ourselves covered. And right now, today, it's okay. It's middle of the road. There's nothing to get excited about. But if we do one side and we don't do the other, and the bad thing happens, you're going to be even higher than where we're at today, and you will be in no man's land.
No, that makes sense. All right. If anyone has any other questions, make sure you toss them into the chat or raise your hand. You can ask them too. It doesn't have to be written out. You can definitely ask them on the back side of things. So that was going to be one you said mentioned Russia doing the unthinkable, and so one of my last questions that I have for you is going to be, what is is there anything that you're watching with the war in Ukraine and in Russia now that Ukraine's taken the war to Russia? Is there anything that you're watching there? And then, Middle East, any sort of worries over, what's taking place in the Middle East? Could those kind of work to also impact the market going forward?
I've got three regions that I wake up every morning and I check my phone for news to see if anything happened. And I go to bed every night checking my phone to see if anything's happened. Number one is Russia, Ukraine, because when you look at it, Russia is a major exporter of nitrogen, phosphate, and potash across the board. Everybody else asks, why did fertilizer prices get so stupidly high back in early 2022? They were doing this, they were doing that. The market truly thought we were losing Russia because they invade Ukraine. I mean, we saw Starbucks and McDonald's pull out. If they're
Hmm.
not selling hamburgers and selling coffees in Russia, we sure aren't going to buy fertilizer from them. But we ended up not only continuing to buy from Russia, but they've actually increased their output of exports. So they are actually supplying more. But again, if a bad situation happens and all of a sudden the world does start to cut off Russia, we lose one of our biggest providers of all three major nutrients. China, Taiwan. China is a major exporter of urea and phosphate. They are the biggest global producer and exporter, historically speaking, of phosphate. If they invade Taiwan and we get into a little bit of scuffle with those guys, it will have an effect. And the third is the Middle East, specifically Israel and Iran and Hezbollah and Israel, and basically everybody trying to destroy Israel. If that place erupts, Saudi Arabia is one of the top five manufacturers of phosphate. The North Africa, Middle East region combined, there's only about one out of every 2 ton of urea in the world that gets exported from that little part of the calendar. It's huge. Now, they've been fighting for millennia, for generations, for thousands of years, and it doesn't appear that anything's going to change. It doesn't look like it's going to disrupt anything. But when you see ships in the Red Sea getting hit by missiles, that disrupts traffic. When you see these missiles flying back and forth between nations, listen, some of those countries got nukes. What happens if all of a sudden somebody gets rash and all of a sudden decides to drop one? And these are incredibly, ridiculously huge black swan events. You do not forecast, you do not market, you do not do these things expecting something like that to happen. But there are things that we do need to watch because if they do start to happen, you don't need to wait for us to come out and say, well, this has happened. It could have this effect. Go buy your stuff before everybody locks their
Right.
stores.
At 8:03 in the morning, you're calling your retailer hoping that they don't realize that all hell is broken loose
Yep.
overnight kind of deal.
Yep.
Yeah, I mean, it's ridiculous the world that we live in, but I mean, you saw the Russia-Ukraine invasion and how it happened, and I go back to that date as the day that I stopped sleeping through the night
Yeah.
without making sure that, something crazy wasn't going on. Not like there's anything you can do about it at 1 a.m., but it sure as heck feels good to not have it hit you upside the head at 3
Yeah.
a.m. or 4 whenever you wake up there.
Yeah. My
Um,
my point of view is if something does happen, I can see it. I can run to my computer real quick. I do not leave this office without my laptop. Just
yeah,
in case, because I can always fire off a quick email that says the second you wake up, go buy whatever you need to buy.
yeah, because things are getting nuts out there in the countryside.
Yep.
What a world. How much fun is this? We just get to spend all of our existence trying to think of all of the ways that things could go wrong.
Yeah.
All right. I think that covers most everything, that I had question wise. Carl, do you have any questions that you want to throw out there? Um,
No, I'm good.
no, I appreciate your time. I think, I'm just gonna kind of too long didn't read version what you were saying, when it comes to the emotion and in the margin and just kind of throw it out there. I believe that there are going to be marketing opportunities throughout the year ahead. Plentiful marketing opportunities throughout the year ahead. For 24, but also for 2025. And so I think, the things that Josh is talking about where it comes to the likelihood of us seeing things stay relatively steady or, even the risk of it costing you more. I know the initial reaction for a lot of folks right now is just pure, ugh, no, not gonna look at it. Um, and that is fine. But also make sure, no decision is a decision. And you can put decisions off as long as you want to, honestly, and until you absolutely need it. But just make sure that you're engaged, make sure that you're kind of studying what's going on in the market, you're communicating with your retailers. Josh, I don't know your thoughts, but I tell my growers to throw target orders at them if you
Hmm.
know that there's certain prices that you're looking, uh, when it comes to your purchase. nothing. Hey, give me a call if this hits this value. You know, it helps your retailer to know what they need to be looking for as well, and it gives them the confidence to be able to make some of these trades or have these conversations. You know, I'm not on the retail side, but in my past life at the elevator, we had you know, custom app and had retail, and it was part of the conversation that we had. And so, you know, I know that ill-defined market and lack of certainty, you know, it can limit those opportunities that show up just simply because everyone thinks that there's nothing out there that they could throw at you. So have these conversations with your supplier too about what it is that you're looking for, what kinds of tons you need, when you're going to be looking to grab them. And you may find, especially if you're willing to take in stuff that is not, you know, if you're out of the normal seasonal push, or if you can kind of help them maybe out of a little bit of a pinch, I think there'll be some opportunities there. And so biggest thing is, you know, margin, focus on your margin per acre, focus on what you're looking for there, versus what you're spending per ton and what you're getting per bushel. And I think you'll probably find that you're a hell of a lot further ahead in the end, and are able to remove some of that emotionality from your marketing and your purchasing decisions. With that, Josh, anything that you want to add before we call her a day?
I don't think so. Just keep your eyes open. To your point, it's in these types of times, it's so easy to just want to shut down and not talk to anybody and not watch and just hope that if you stick your head in the sand long enough, things will be better when you pull it out. That's when opportunity pops up because nobody else wants to look at it.
That's, if you're sticking your head in the sand, you need to have someone on that's on your side that isn't. So if you're working with someone that's going to tap you on the shoulder and say, "Hey, it's time to pay attention," that's cool. If you're not, sorry, you need to be paying attention.
Yeah, you don't get
Because
that luxury.
especially in these markets, it's not what it used to be. It's so
No,
much crazier. All right. Well, I appreciate your time. I will send the link out, or I'll get you the emails, and everyone will get it to take a look at the September content, and be able to sign up if they'd like from that. And yeah, if you guys have any questions whatsoever, just reach out. We're an open book. You know, Carl and I are here to help you in any way that we can when it comes to the marketing side, and we love to connect anyone with folks like Josh, who can also help you on the side of the things that we don't know about. So with that, we'll call her a webinar, and I thank you. Maybe I can end it someday. There we go.